Aaron Cutter is principal of Affinity, an actuarial and management consulting firm to the general and health insurance industries, leader of its accident compensation and CTP practices. He's also based in Sydney. Seems everybody's Sydney. Nobody's in Sydney doing any work today. He's worked in the general insurance industry for more than 15 years, particular expertise in accident compensation schemes, reserving, pricing and capital management, also in lenders, mortgage insurance and CTP. Would you please welcome Aaron Cutter?
Thank you. Also co-presenting with me today is John Tindall, who's also from Sydney and from the Affinity office. There's been some administrative hold-ups that have stopped John's bio coming over the ditch. So could you come up please too, John? Thanks very much. So we get the slot of going just before lunchtime and starting over time, so hopefully we'll have you out of here by 1 o'clock. I've got a good timekeeper with us to keep us on track. We've got a bit to get through, so I will be hopefully speaking not too quickly. But after the, I won't say doom and gloom, but after I guess the awareness that we've just been through on cyber risk and how that is being generated through many different points of call, including things like the Internet of Things, I'll be hopefully putting a bit more of an upbeat slant on the data, the use of data, and the way it can be used for good rather than for evil. One thing, why would we want to be using big data? What's so good about big data analytics? Well, I guess one thing is that a 2013 survey from Bain Consulting, or Bain and Company, showed that people that use information well and that are leading in that space are twice as likely to have good results financially. So that's, one tick. But leading to that, they're more than 5 times more likely to make speed-critical decisions in a timely enough fashion than their peers. And moreover, they're 3 times more likely to effectively execute off those decisions. So if you put those things together, you've got a 5 times better likelihood of making decisions more timely, and you execute 3 times more often, then you're 15 times more likely to do something well compared with your peers. So therefore, twice as likely to appear in the top quartile of financial results in your industry. Not surprisingly, I suppose, the 4th bar on that chart is that if you are leading in data analytics, then you're twice as likely to use that data when making decisions. So I guess this sort of differential is the reason why big data and data analytics is gaining such momentum. It's not just about the technology. In fact, it's not about the technology at all, in my opinion. It's about the way in which we can infuse it into our businesses and use it, as well as the human insights, to make better decisions, better judgments, and make better contacts with your customers. We talk about the bigness of data. There are 3 V's, in fact, they're being added to all the time. I'm not going to mention the words, but I guess what we will be harping on a little bit again is that the information that is going to be richest about your customers, about their desires, about their behaviours, about their purchasing attitudes, actually comes from them themselves. So the way in which this complex web of data comes together is what the real challenges are for businesses and insurers in particular going forward. You might be surprised to know, you might not be surprised to know, that 90% of this information about individuals around the world, 90% of what's in existence was actually created last year. And that's only getting bigger and bigger every year. Again, the Internet of Things, the wearable technology, the sensors that are put everywhere around us to describe us and our environment and our interactions, what's generating this information and taking advantage of that and exploiting it is, exploiting it in a good way rather than a nasty way, is where we feel that businesses need to be thinking and thinking very carefully. I have a number here, I don't know really what it means, is that the Internet of Things and data contributed to day-to-day activities, or understanding that day-to-day activities in 2014 was 6 zettabytes. I'm told, and I hope it's right, that's 6,000 million terabytes. So that's the worldwide generation of information that is able to be, information and knowledge is able to be gleaned from if we can do it well. Again, why take advantage of all this information? The middle bar on that chart is highlighting the insurance sector. What we are seeing, and this technology is associated with what's known as industry disruption, so a disruptive act. It's essentially about making a break away from the pack. So the grey bars at the bottom are essentially ranking industries in order, and insurance is kind of lagging a little bit behind, certainly lagging behind media and certainly lagging behind technology industries in the way it's used this information for its intrinsic value. We think that in order to catch up for the insurance industry, that something akin to the risk management culture that's been around for a while now in the industry needs to be applied to the big data area. So a big data culture needs to be imbued through the organisation. And that's to ensure that from the top down, all of the potential benefits from strategy decisions, from customer interactions, from anything on that value chain through to claims processing, fraud detection, is cognizant of that there is an amount of information out there and a way to analyse it that is going to help those decisions. Quickly race through these next 3 slides before John gets up and talks a bit more specifically about one element of big data. But just to reiterate, at the centre of your organisations, at the centre of most people's organisations, I suppose, is your customer. And in an insurance context, and perhaps you can expand this elsewhere, but it's about optimising the reach and the influence you can have on your end users or your customers and your potential customers. So that's one element of big data that we know exists to date. Media agencies are working with organisations all of the time to try and segment the customer data or customer potential into who can be targeted, in what way, and what is going to be the most effective way to get their attention. In an insurance-specific context, there's also the way in which the risk and underwriting and pricing is assessed that can benefit from customers' own information and information outside that customer. So novel measures of risk and proxies to that risk. The service, and I guess, and we'll touch on this a bit later, is that many people are looking to information about users and individuals or individualised information to help them with that interaction with the customer, with their end user and with the policyholder in the case of insurance companies or the claimant, if it comes to that. And so providing that personalised service to them, becoming intimate in a sense with the policyholders and the claimants, is where the value seems to be attaching to the insurance industry at this stage. Now clearly, as actuaries and insurers, we have used information and data a lot, and probably more so than most industries. But what we're finding is that it doesn't provide us with enough information to segment about how to interact most effectively and without annoying our customers. And leading on from that is developing and providing relevant products. And you know, without being too blunt, hopefully, pushing those products to your customers that have the best chance of turning a contact into a quote, and a quote into a conversion, and a conversion into an ongoing renewal stream. There is your own data, of course. So data is generated from a number of different sources. Now, clearly, insurance companies have lots of information about their customers and their clients. But what to do with that? So the generation of that plus additional sources from many and varied areas needs to be captured efficiently, noting the high velocity associated with the data that's coming from your smartphones, from your Internet of Things from your wearable technology. Maybe you've got a device that tells you whether you're sleeping well during the night. So that's kind of instantaneous capture. Twitter feeds. I won't use any other social media names, but there's those sorts of things that are required to be captured and stored flexibly and scalably. So joining these things together in a way that makes sense and in a way that can be scaled as the information that you want to capture, the universe expands and your customer base expands and the technology changes, that increases that 6 zettabytes of information around the world up to approximating 20 zettabytes in a few years' time, and that's the expectation per annum. And the last stage, I suppose, is that transformation. So it's no point having a lot of information sitting around that isn't able to be analysed in a way that can provide you with the insights. So that mashing of information together, ready for analysis by very smart people, is a very crucial step in this process. I'm going over time, so quickly. Insights, I suppose, are where we see the value in big data, in the information that we're talking about. So interrogation by smart people, finding the patterns, finding the signals in that data that we may not necessarily have appreciated were there. Sometimes they're surprising, sometimes they come from our own hypotheses, but being able to find them is extraordinarily useful. Self-learning is something that's coming to the fore recently. It's where information gets pushed into an algorithm, and it's an artificial intelligence algorithm where the more it understands the outcomes of its predictions previously, the better it can then predict the future going forward. So that self-learning becomes something that's intensive from a resource perspective up front, but less intensive going forward. As long as the actions coming out of it are sensible and appropriate, then it's a very efficient way of utilising your data. And more data visualisation is what's being spoken about. So getting something from the analysts, the data scientists, and the information that's being captured and analysed by them in a form that actually makes sense and you can make a decision from. That's where the real gold is. My last slide before I hand over to John to talk about telematics is just summarising those things together. Essentially, it's mashing of all that information together to generate a rich, and we'll call it a multi-dimensional view of your customers in order to provide them with the best service, the most bespoke service that they would be entitled to feel entitled to provide them with the right products and at the right price. So, without further ado, we're going to get stuck into a specific example of big data and how it's being used right now with John and telematics.
Thanks, Aaron. So, as Aaron mentioned, it's probably time to get our hands a little bit dirty and actually not talk hypothetically about big data and talk about where it's actually being used at the moment in the insurance industry, and telematics is a really good case in point. People would be pretty aware of what insurance telematics involves, and if you're not, I'll spend about 30 seconds on that now. But I'll talk briefly about what it is, I'll talk very quickly about where the market's at the moment, and then I'll dwell for a little bit longer on how this all meshes up with Aaron's talk. Insurance telematics is basically where you collect information about the driver's behaviour, about the motor vehicle itself. You collect that information and you send it off to a number of different parts of your organisation to analyse and gain insights. And most immediately that's to analyse risk and to better segment risk, but obviously there's a whole sorts of other applications that data can get used for, whether it be on claims, whether it be in fraud, whether it be cross-selling, whether it be roadside assistance or other sorts of functions like that. So it's big data in its heart. And really insurance companies are still just getting to terms with how they might approach this new technology. A really quick history, it's probably been around for about 15 years now in a form or another. It all kicked off with Progressive in the US back right at the end of last century, and they were the first to implement telematics devices in cars plugged into your OBD2 port. It was a really basic sort of product where they really just looked at where you were and how far you drove. Over the last 15 years, that's progressed through different forms. We've had different players dabble in the area, and probably in the last 12 months, we've seen some decent activity both in Australia and New Zealand. Obviously, you'd probably be aware of a couple of launches in Australia at the end of last year, and earlier this year, Tower launching their app-based product, actually the first app-based product in the Australian New Zealand markets. I'll very quickly talk about what's happening overseas. Obviously, there's different dynamics overseas, so the market's exploded at a much faster rate, particularly in the UK and in Europe. They've got bodily injury as part of their comprehensive motor policy, so there's a much bigger piece of premium to play with, which obviously helps you sink some of these expenses. They've got things like the gender directive in the UK, which has given another big push along, which means you can't rate on sex anymore. So there's a really easy way of working out whether you're male or female, and that's to monitor how you drive. And in EU, Italy is probably the furthest down this path, and they had significant problems with bodily injury claims, particularly whiplash claims and the like, and also theft. It's got quite high theft rates. So, you would have a little ding where there's no damage to the car, but all of a sudden all 4 occupants of that car have whiplash, and you're up for a few $100,000. So these were seen as ways of assisting in claims management. Not so much in risk segmentation, but obviously once you've got the data, then you can use it any way you like. So about 5% penetration in Italy, which is huge, and Allianz really leads the way there. The US a little bit slower, although Progressive started it. They've got some similar dynamics, but they're moving a little bit more slowly. I think Progressive have about 1 million policies at the moment, which is pretty good, but some of the other players are sort of finding it hard to get that sort of volume. South Africa's got a lot. It's quite popular over there, and obviously that means a bit to some of the Australian and New Zealand insurance companies who are obviously owned by their South African parents. And it's fuel's a big thing there, so often the discounts that are given to customers are in the way of fuel. And just quickly in Australia and New Zealand, I mentioned there were a few recent launches. AI Insurance, small underwriting agency in Australia, was the first to go. QBE put out a product last year, but forgot to really market it very much. And of course, Tower this year came out with the first app-based product, which we kind of see as the first serious attempt at a telematics product down under. So telematics and big data. Well, it's got all the components, the V's that Aaron was talking about. It's definitely got volume, and it's definitely got volatility. So huge volatility to data. Most of the applications or boxes will give 1 second updates of all sorts of information. So not just your driving behaviour, but what's the engine doing, how's the engine feeling, what else is going wrong in the car, and any other information that can be used by the secondary users of this data. It generally, I've got a phone there, but it can be a box. It goes up into the cloud, it gets managed there for a short period of time before the different stakeholders take their piece and analyse it. And then it feeds back obviously into the business into a number of areas. So risk we've mentioned, marketing we've talked about, cross-selling opportunities, and the monetisation of that data downstream from where it's being collected. So it's got all the components of big data. App-based telematics, I think this is really the only plausible business model in Australia and New Zealand. We don't have as much premium to play with. If you've only got $500 or $600 policies, then you can't spend $100 installing a box in someone's car. So apps are a way of getting around that. They're very cheap to set up and obviously very cheap to distribute. They've got some downsides. They're not connected to the car. But some of the recent technology, the improvements have really overcome some of these, so that they've got these auto start functionalities where the app will start without you knowing it. It's got driver DNA, which the app spends a few minutes working out whether it's you driving or whether you're on a train or whether you're going for a jog or whether you're just in a passenger in someone else's car. It's obviously less intrusive, cheaper. People aren't really aware that it's monitoring them, and in essence, it allows you to integrate that with all the other sources of information that obviously you get through your smartphone. So location services, syncing with social media, cross-selling, marketing, etc. So what's in it for the insurers? So what is the insurer proposition? We actually did a survey, and this is just one extract of a survey we did across Australia and New Zealand of a large range of insurers, and these were the results from a question we asked, which was, what was the biggest benefit to insurers? And probably not too surprising what people said, but I was a little bit surprised at the ranking, and I guess the emphasis they placed on the more obvious aspects. So better segmentation of risk, i.e. that's basically a selection effect, i.e. how better is this person simply because they're coming to you, and how can you better understand their risk? Improved driver behaviour, does it help them drive better over time? Improved policyholder retention is a huge one. Instead of just touching your customer at a claim time or once a year, you're touching them every day. You can cross-sell, you can market to them, and you can have an online experience that syncs with your telematics device that allows this gamification, is what they're calling it, where you interact with them through league tables, through giveaways, through other sorts of incentives and bonuses. But there I list a few of them, and what rated lower were these cross-selling opportunities, claims handling efficiencies, and fraud prevention, which I think if we do this again, probably in 12 months or potentially in 5 years, you'll see those rank a lot higher. And just by the way, there's a bunch of copies of that sitting out the front there, but there's only a few, so if you're lucky enough, you can pick one up. And so really that's it. I'm blasting through what's normally a much longer presentation, but where's this all heading? And I think obviously there's this opportunity to integrate this with a whole sorts of other products that not just insurers, but bank assurance firms or other firms would find useful. So how does your driving behaviour influence the way you claim on your home policy? How could a motor club use a telematics device to really get in touch with their membership base and really provide them some services that go to the heart of their reason for being? What can all this data be used for? I've probably mentioned all of those things, but marketing, maintenance, breakdown services, all this downloadable content, maps, weather, etc., etc. And where does that leave the insurance industry here? Well, I guess our view is that the manufacturers are going to probably hold a pretty prime place in this. They're going to be right at the top of the stream. Most of the telematics devices in 10 or 15 years' time will be pre-market. They'll be pre-installed in your vehicle. So all the codes and all the access to that data would have to be unlocked for you by the manufacturer. And in fact, they're going through legal battles in Australia at the moment trying to get manufacturers to unlock the codes of what certain things mean inside the vehicles. So they're really going to be in a big position to own this data. And we asked a question in the survey about what people thought would be the role of the manufacturer in all this down the track. And for the most part, they thought that they would be an integrated aftermarket service. So where you'll go and you'll buy your car, you'll have assurance attached to it, it'll have roadside assistance, it'll all be packaged up, and you won't even be aware of the distinction between those different services. And finally, who owns the data? That's probably untested in Australia and New Zealand at the current stage. It's being tested overseas a little bit at the moment. Who owns it and what can it be used for? I mean, our view is that it ultimately will always be the policyholder, but what is it going to take to get them to share that data with you? And I'll just cross back to Aaron for a wrap up.
All right, so just really quickly. Is the mic on? Yep. Just really quickly to wrap up. So in addition to the telematics survey, we also conducted a big data survey. You may have been subjected to that, so apologies for the surveys. And what we've found is that essentially amongst the insurance community, big data really is on everyone's radar. So it's being spoken about, it's being thought about. In fact, it's being thought about at a very high level, being driven out of the executive teams mostly. But we're not very far down that track. We think that there's value across the value chain, from own customers to potential customers, right down, as I was saying before, through to claims and retention. The question that's on most people's minds, and this was maybe a little bit surprising, it wasn't technology, it wasn't privacy, although those are very high up there. The thing that was most on people's minds is what data? What data to get? What's going to be valuable? So I think that is a question that does warrant some pondering. Consumers' purchasing behaviour, how does that affect my insurance purchases, behaviours and risk? So making these links, you can't clearly collect everything, so there needs to be some selection on that prior. And the other thing that was a little surprising, and I mentioned it before, it was not about risk rating, it was not about pricing. The value that's being perceived to be next cab off the rank using this external information and own data better is on the customer experience. So the enhanced product services, treating me as an individual, making sure that you are contacting me in the appropriate way, and providing me with things that I want and nothing that I don't want. Thanks very much. Going forward, I'll skip through that. Going forward, it's pretty exciting. Now you can dream up a wonderful range of things that might be happening using information and data in 2020. But I thought I might make it a little bit more tangible than that. And there's 4 examples that spring to mind which are kind of happening right now. Firstly is around fraud detection. I won't go into that anymore. It's been spoken about previously. The second is about improved weather forecasting. So you've got guys like IBM, you've got guys like Earthrisk, and the Joint Polar Satellite Mission, which is due to launch in 2018, which is designed to look at in real time things going on our planet, so that they can better predict paths of hurricanes, windstorm, etc. So that's really exciting stuff that's going on there. I guess the other exciting thing closer to the surface of the Earth is around the 80% of unstructured information that's in the medical area that is currently being utilised to help with treatment plans and help with diagnoses. So not only with with Watson, who we've all heard about, the other IBM thing, but there's groups coming out of Boston that are using 20 million data points from 20,000 procedures to try and link cause and effect and outcomes to various treatment plans. And that helps with things like remote diagnoses, and that'll be really beneficial to those emerging markets, those emerging communities. And the final thing, which is there's a picture up there. So you've got not only Google, but Intel and Ford are all undertaking technology development to make our driving and our roads a safer place to be. So I guess with all of those things that I've mentioned that are currently happening around the globe right now, you can see that insurance plugs into them directly. So they all have a direct flow and effect to the insurance community, how we price, what rating factors become irrelevant and what rating factors become relevant in the future. So as I say, insurance and the insurance market will be well and truly immersed in big data by 2020, I can assure you of that. That's all I had, so thank you very much.